So Japan has done well, not just in the recent month, but it is actually the best non-US market in US dollar returns over the past 10 years. So Japan has performed about 90% in US dollar terms in 10 years, whereas IFA has turned about 63 and emerging market is about 35. So yes, it has performed well over the past year or so, but it's been more of a 10-year run rather than this short term. And the point that I want to make here is that majority of those returns are driven by strong EPS growth. Yes, we had some kind of a multiple expansion, which has been the case for especially the past few months. But majority, if not all of the return that have been produced over the past 10 years is through EPS. I think it's definitely moving in the right direction. And it's worth noting that even with the record high share buybacks of Japanese corporate last year, in aggregate, it's still less than US company Apple. And the buyback yield of the Japanese corporates are still give or take 1 to 1.5%. Even if you add the dividend yield, the total payout yield, including of which is an addition of dividend and buybacks, still lags that of the US and European counterparts. This is on top of the fact that half of the Japanese listed companies are net cash, and they're not even paying out in order to even stop the decline of ROE because they accumulate cash much faster than they can deploy. So I think there's ample room for upside with regards to gearing up their total shareholder return for Japanese corporates in our view. The small caps has been underperforming versus the large caps for almost 5 years now. And a lot to do with that is, simply put, the larger cap companies were growing faster than small cap companies. And especially over the past year or so, that gap has widened, but it has more to do with multiple expansion than EPS growth. Because if, for example, Nikkei 225, which consists from larger cap companies, are right now trading at 10-year highs in terms of the valuation. But if you look at the broader indexes, such as the MSCI Japan or Topics Index, which contains more mid-cap to small-cap companies, right now are trading somewhere around 10-year median average price to earnings with regards to valuation. So right now, compared to last year or 2 years ago, we see a lot more opportunities on the upside on the small-cap space or the mid-cap space. But again, what it comes down is we don't invest in large caps or the small cap for the sake of market cap. We always invest in companies that have superior growth over the mid to long term.